So, David, if you were a farming superhero, what would be your superpower?
That's a good question. I'm also slightly more interested in what my outfit would be. Superpower. I'm going from an arable farmer perspective.
Mm-hmm.
The ability to walk around a crop and just like zap weeds and disease. To be like, yellow rust, be gone. Field gets clean.
So kind of an Iron Man agronomist.
That's it. Yeah, I like it. Yeah, you could just like spray herbicides and stuff like that and just, do it. What would yours be, Jack?
It's kind of a take on Spider-Man, and everybody knows that farmers are very, very versatile with a piece of baler twine. So rather than shooting spider webs, you're shooting baler twine to automatically tie that gate up with a reef knot. And I think it's going to have to be bright blue baler twine. I'm fed up with orange. It's too boring.
Hello and welcome to Agonomics with me, David Udall.
And with me, Jack Watts.
Together we're trying to make the economic side of agriculture that little bit easier to understand.
You're welcome.
We don't wear capes, but I like to think of us as being a pair of superheroes. Don't you, Jack?
Absolutely. Who needs middle-aged men wearing Leica costumes with pound signs and pigs on their chest when white shirts and blue jumpers will suffice?
Each week we look at some of the great work AHDB has been doing.
In this episode, our focus is on the current macroeconomics and the impact it has on UK agri-food.
If you enjoy what you hear, I'd also recommend our back catalogue, where we've covered the likes of the Sustainable Farming Incentive, inflation and consumer trends, and
fancy football farmers.
Please follow or subscribe to this podcast to make sure you don't miss an episode.
New shows drop every Wednesday at midday, and please get in touch.
Comment on any of AHDB's social channels
or email us agonomics@ahdb.org.uk.
Through the month of August, a lot of people go on holiday and enjoy themselves, not us, hard at work with podcasting as ever. But I tell you what hasn't had a holiday, Jack. The beef market, the cattle market, that's seen a change around, hasn't it, over the last few weeks?
This is much more than sort of usual market activity. I think there's a little bit of anxiety about the supply side, and certainly speaking with colleagues, they're looking more and more at what that supply looks like. But if we look at how August progressed, looking at the all steer prices, we are heading closer and closer to that. What some might describe as the magical £5 a kilo mark. We're not quite there yet. We started in August at just under 485 pence per kilo, and gradually heading closer and closer to that level. So I think all eyes are going to be on this marketplace and to see what happens. But it's probably the most exciting market at the moment.
It is. Should we have a market of the week? And if we did, it would be the cattle market, wouldn't it, this week?
What a feature. And we should put a jingle around it.
There's a challenge for Martin, the producer. Anyway, following on from our last episode and my comments of not seeing a combine in action this harvest, our friends at Ames actually tweeted a GIF of a toy one in action. Now, I should say, I know what a combine looks like. I know what they do. I just didn't physically see one moving through a field in real life. That was all.
And we've both got a mystery word, phrase, or thing that has no right to be in a podcast about agriculture or economics to slip in somewhere that may or may not have already been used in this episode.
So on this week's podcast, we're going to be talking about the bigger picture, nothing specific about an individual sector, but taking a bit of a step back, looking at some macroeconomic trends, looking at what's going on in the world. Don't worry, this isn't scaremongering. We're not panicking. Don't go out and rush and panic buy your toilet roll or anything like that. This is all about understanding how that bigger world works and the impact upon agricultural markets. So we're going to be looking at what drives GDP growth and kind of what the impact on our markets are with that. Currency as well, which is really important. Energy, but also looking at some of the broader commodity markets like metals as well. So where do you want to start, Jack? On the smorgasbord, it's a good word, isn't it? Not the mystery word there, in case you were thinking. Just a good vocabulary. I've been watching the Muppets as well. Where do you want to start?
Why don't we start with some GDP growth, and because I think it's an important part of the economy. We hear it all the time from politicians. Certainly the growth agenda domestically is going to be a really, really important part of it. But actually it's really important to agriculture. It's really important to the volume of products that consumers buy, but the type of products that consumers buy as well. We've seen quite a lot of volatility in GDP growth over the last few years because we've had COVID, we've had the bounce back from COVID, then we've had inflation. And so that's really not consumers around the world. And we're still dealing with the tail end of that. Remember, we were talking to Susie a few weeks ago on the dairy side of things, and that consumer confidence is ebbing and flowing because of what's going on. So it does have an impact on not just those kind of commodities, but the volume of commodities as well. And as economies grow, then developing countries tend to want to adopt a more of a westernized diet, particularly of livestock products and vegetable oils as well. And that was the big China story, wasn't it, through the through the noughties.
Right, I'm going to test your stats here, Jack.
Oof.
What do you think the forecast GDP growth for Guyana is in South America, according to IMF?
26.6%.
Oh, good guess. 33.9.
There we go.
Not the biggest economy in the world, but
Yep.
import. It just sort of shows there's some big stats out there. And then you look at other areas of the world. Actually, from a US perspective, it's sort of 2.7%. Canada's 1.2. And then you come over from a European perspective, and other than a bit of positivity with Spain and Portugal in sort of high 1%, as soon as you start getting Germany, Netherlands, France, ourselves, it's all single decimal places of 0.7, 0.2, 0.5% growth rate. So there's definitely a Central Western Europe slow economy, and that impacts our trade as well, because obviously that's where a lot of our products are going.
Yes, there's certainly a east-west divide on economic growth. I guess there's always a bit of a health warning to an extent on how you look at growth figures. I think China is a great example of this as well. So go through, as I said, through the noughties, and Chinese economy was really growing. We saw quite a few periods of double-digit growth, but that was from a relatively low base. And so now everyone's kind of, more recently, economists become more and more disappointed with Chinese growth from a percentage point of view. But I'm sure, but if you looked at it on an absolute point of view, the growth is actually still as impressive. It just looks less impressive from a percentage point of view because it's diluted by the fact that the base that you're comparing to is much bigger than it was before.
It's that separation, isn't it, between, I suppose, more structured economies and the westernized economies compared to those emerging economies, and where that demand is. And it thinks sort of longer term demand, especially for things like beef products and environmental impact and how we fit into that, that there is that kind of emerging middle class globally. And whilst there may be areas where we see per capita consumption of some products decreasing because of that economic growth in these other areas,
exactly,
that's increasing that per capita consumption as people move to a more sort of middle class westernized diet. And therefore you've kind of got that balance of going, the environmental impact and where UK agriculture can come in and act as an opportunity to export some of the positive products that we have and environmentally friendly products that we have can meet that. So I think in some ways, whilst we look domestically and sometimes think, we've got a bit of a shrinking market, there's potential for us to be expanding our exports into these other markets that are definitely going to be developing over the coming years. Exchange rates, obviously then important on that as well. And this is something that's long-term significance to the market, but also has short-term significance, whether import or export parity on a cereals market versus relative competitiveness of exports of all livestock products, really, to be honest. And that's also kind of importantly that fifth quarter product as well that's moving out. We've seen a period where the dollar's been moving weaker against the euro over the last month, and sterling has been strengthening quite a bit, although it had quite a big dip, didn't it? Obviously, sort of like pre-election period and then bouncing after the election. So you see short-term volatility that does definitely impact the farm commodity prices that we see. And some of those markets are more liquid and kind of immediate in terms of the way that cereals markets work through the functional futures markets. Some of it's a little bit longer, but that currency translation has a direct impact on the commodity markets that we produce.
Staying local, I suppose, and understanding the value of the pound against either the dollar or the euro. So we're really interested in dollar relationships because the world of commodities operates in dollar. We're interested in euros, of course, because that's our nearest market, whether it's exporting to or importing from. And so the value of the euro does matter. So if we look, the trend is actually for a slightly strengthening trend in the pound. So recently we've moved above $1.3 to the pound, and that's got a psychological level, and we're edging closer to tipping over that 1.2 euros to the pound as well. That presents a challenge. Strengthening pound makes our exports less competitive, and so our market has to work harder to move products out into the market, and at the same time makes imports cheaper. You could argue actually makes imported inputs cheaper as well, but because we're generally producing more stuff than we're consuming as an agricultural industry, the net impact of strengthening sterling tends to be a negative impact from a commodity producer point of view.
And obviously impacts the relative demand for booze cruises going over the channel as well in our sterling euro rate. It's not like the days pre-Brexit when you had £1 was good 1.40, and
Yes.
it's a completely different world that we're in now.
Maybe the tides will turn. Maybe people will be flocking from the Mediterranean to the UK to take up a soggy Bognor camping holiday.
We're going to say like buy some Stilton cheese or something. I've never been to Bognor Regis, actually.
Neither have I.
Don't know if we're going to get an invite now.
Not sure. I guess I'm zooming out, the key value of the dollar and what people refer to as the dollar index is an important thing, and the state of the US economy and the state of the global economy, because commodities are denominated in dollars, and so what the dollar is doing determines whether investors and the broader financial environment is interested in commodities. We saw post-financial crisis, the dollar index fell. The dollar index is really an average of the dollar against sort of a key basket of international currencies. And if the dollar falls, that creates interest because the dollar might start to look like a good buy, and you've got to put that cash somewhere, and so might be buying commodities because they're dollar denominated. The dollar has weakened a bit recently, so that might be good news, but I would suggest from a fairly high base. We've seen sort of post-COVID and inflation, we've seen those policy interventions and quite a strong US economy, which then translates into a relatively strong US dollar. Of course, we've got US elections coming up, and that might be a bit of a game changer, but it's kind of, I'd say there isn't the interest in international commodities because of the dollar that there probably was sort of post-financial crisis, and that's been like that for a while, but it's kind of certainly been amplified by what we've seen sort of post-COVID.
Yeah, and we see it in times of international crisis, don't we? That there's safe havens that people go to. You go to Swiss currency, you go buy gold, you go buy dollar. They're always deemed the safe havens. So you do know that dollar is going to be the indicator, and it will be interesting to see. You come from a US election perspective where that goes, but then you also kind of broaden it in with all of those kind of bigger, wider geopolitical events around the world at the moment and ongoing conflicts. And before we started recording this, we were saying about where did you think we were going to be like 3 or 4 years ago, mid-COVID, of saying you'd have a number of global conflicts going on and Donald Trump going for re-election and all those kind of things. We're in an extremely volatile world, and it's also driven by the change in the way people consume information as well.
Yeah.
And the markets are far more rapidly moving because of that reactive piece of information, and the way that information is hugely sped up from where it was 10 years ago, let alone now the threats for disinformation and false news, false news. So it's just all a challenge. And that comes back to all of this, really. What we're trying to say is all of this globalized stuff is affecting the farm commodity prices that our levy payers face and that our processor levy payers are operating in. And that's basically kind of where I see our role as AHDB is, especially from a farmer perspective. We are able to have the time to analyse that, understand it, and condense it down into that message and actually clear out some of that stuff that isn't as important. And if people start talking about, oh yeah, Guyana's GDP is going up 34%, therefore, wow, let's go and focus on that. We can say, actually, that isn't really the biggest driver of your land market at the moment. Let's look at the euro sterling exchange rate, etc. That's where our role comes in as the sort of the translator, I suppose, if that's the right word for it. Right, we've covered a lot there, Jack. We're going to have a short break now to get the latest on the markets. And when we come back, we're going to be talking about energy and broader commodity markets like metals as well.
Hi, I'm Olivia Bonser, Senior Analyst at AHDB, with a look at grain and oilseed markets for the week commencing the 6th of January. Despite some support in wheat markets over the Christmas period, prices have been under pressure in the new year from a strengthening US dollar, technical selling and sluggish global demand. However, Russian wheat crop conditions remain in focus, with warmer than usual temperatures and excess moisture in key growing regions. Persistent hot and dry weather in Argentina is also raising concern over the country's maize crop, which is now in its critical development stage. For rapeseed, new crop prices are supported, with doubts over prospects for global rapeseed production in 2025, though forecasts of heavy soybean supplies from South America limit any major price increases. Over the next few weeks, weather in major exporting countries such as South America and Russia will be key in driving prices. The USDA will also release updated global supply and demand estimates at the end of this week. To stay up to date with the latest data and analysis across arable, red meat, and dairy markets, head to hdb.org.uk and click on Markets and Prices.
If you're in the market for another podcast to subscribe to, then look no further than our Manager's Special, AHDB's Food and Farming podcast. Recent episodes include a consumer insight offering on red meat labels and supermarket aisles, as well as a dairy special about our work with retailers to promote milk. If you're after herbs, or rather herbal lays, our shelves are stacked with sage advice on how to introduce lucerne and clover into your fields. In fact, we cater for all tastes, so you'll find sections dedicated to all sectors: pork, cereals and oilseeds, dairy, and beef and lamb. And don't forget our middle aisle, where you can often pick up a bargain episode you didn't know you needed to listen to. Search Food and Farming wherever you get your podcasts. AHDB thanks you for your custom.
Welcome back to Agonomics with David and Jack. Before the break, we sort of started to talk in some detail about some of the macroeconomic issues around the world, and the noise that it can create and the impact it can have on agri-food markets and farming businesses. And we're going to carry on that theme. And I suppose 2024 has been a massive political year around the world. We've had, I think someone said that a record number of elections, I think, through this year. It's not all over yet because, of course, we've got probably the biggest one yet, the US elections, where I suppose a lot of people earlier in the year probably thought it was a done deal with Donald Trump coming back in and the impacts that would have had, particularly on global trade, the relationship of the US with China and what that means for the trade of agricultural commodities and the knock-on impact of that around the world. I suppose there's a lot more uncertainty now, isn't there, around what will that outcome be and what that means for the direction of the US. And we know the US is a huge supplier and exporter and consumer of commodities.
Well, it's the way that commodities get caught up as well in those, other trade conflicts that can occur when you see that sort of uncertainness. And we've seen it previously from, like you mentioned, US, China there, and some of the trade spats, if that's the official economic term, that's occurred, and how commodities have got caught up with that. And that just leads to issues, not only from a commodities perspective, but it's an end product, isn't it? Because Scotch whisky was caught up with it previously, which then isn't necessarily the actual commodity market, but it's the end product, and therefore malting barley gets affected. So it's more of a show, isn't it, that when we go through these periods of uncertainty and periods where there might be more tension in trade around the world, the agricultural markets that we produce are immediately impacted. And to an extent, there's very little that an individual farmer can do about that or prepare about that until it happens, because all of these things are uncertain. It's difficult to kind of give an outlook and give a forecast of saying we think this is definitively going to happen. But I suppose having an appreciation of them and having a business, as we said before, that's diverse enough to go through these periods is really important.
It always amuses me, we've been used to the US growing its corn-based ethanol industry over the last 15 or so years and increasing demand. Earlier in the kind of the campaign, there was this article about, and I'm not quite sure if it's got legs, about sustainable jet fuel and what that might mean, which is the US corn farmer is a very strong, very influential political beast in the Midwest. And so it's and that's what's enabled a lot of that demand growth in ethanol to grow. That's mainly for cars. But now there's kind of this hint of, okay, what does policy look like to support that corn demand to produce fuel for sustainable jet fuel? I thought that was a real quirky thing, and you just kind of wonder actually how far from reality is that.
Sustainable jet fuel sounds a little bit like magic beans, doesn't it? But it also probably could be a very real thing that could happen with it. So we're talking about elections, Jack, and we've got the Australian election as well. I used to live in Australia for a short period. And did you see that in the Northern Territories that the main issue in Australian politics is around whether you can have crocodiles as pets?
I don't see a problem with that.
Well, it bites your arm off. But no, I don't. I mean, there's plenty of crocodiles there, so you might as well look after them in the nicest way. But that's a genuine issue in Australian politics at the moment. But it is something that's a potential risk and impact upon our domestic market, is where that Australian election goes with regards to live animal exports and how that and has got a multiple, it's like a domino effect, isn't it? It's a decision by one country, but has an impact on how they can trade with their nearest partners, which then has an impact on that demand source, and it filters through very quickly through the global market and affects us.
We talked with Izzy, didn't we, a few weeks ago about what this all means for the lamb outlook. It's a little bit quirky. Australian elections, not imminent, but coming up. Will an incoming government carry on with that commitment? Because it's not going to happen immediately. There's a transition. If it does carry on, what will the implication be for Western Australian farmers? So the current schemes about supporting Australian sheep farmers to essentially destock, which I was absolutely shocked to hear, because I think, okay, well, maybe they're going to increase their processing capacity so they're not exporting live animals. Maybe they're going to look at processing more and moving more products out rather than live exports. So it's a real interesting one, just a real work of what's happening in the lamb market at the moment.
And if we move on, Jack, and look at other markets around the world, and something that I suppose we've both looked a lot at over the past 3 or 4 years, given a lot of different reasons for driving volatility, but on energy markets, and specifically, we should start with gas markets as well. We saw a huge amount of volatility 2.5 years ago. I mean, there was some structural supply and demand issues in the gas market. It was massively emphasized and driven by the conflict in Ukraine. That led to the spiking fertilizer prices that we've seen relatively since 23 onwards. For the past sort of 18 months or so, we've had a much calmer period of markets. Saw a bit of a spike in gas markets recently, but they've dropped back off. But it's also one of those ones where, due to that impact on energy in all forms, obviously energy from putting it into fertilizer perspective, but obviously energy also for running facilities, that gas market is something that is still, I suppose, one to watch out for. It would again be impacted by all of those sort of bigger, wider geopolitical things that we've spoken about.
I think certainly the European gas market is not out of the woods, in my view. We're still looking at, everyone is running for the fire exits who was involved with using Russian gas. And so that has been a real drama over the last few years, and impact fertilizer, but so many other applications of energy into the food system. It was pre-Russia, Ukraine, kind of the gas market was kind of there, but I do feel there's a real lack of appreciation of just how many applications that form of energy had and still has in the not just production of fertilizer, but it's all the applications of producing food. And I think that certainly was a real driver of food price inflation.
You're sort of talking about volatility in areas where there might be potential gains. If we think about this from a trading perspective and the way that people look for value in market, from a commodity cycle perspective, we definitely go through some like bigger global cycles in commodities, don't we? And commodities have always been a bit of an inflationary hedge. Because they move in a very different way. And if you look at, say, metal markets, for instance, the copper market is still relatively firm. It's had a bit of an upwards trend over the past couple of years. Our agricultural commodity markets, are they investable at the moment? Are they areas where cash is going to move into? Or from an investor perspective, is actually the the potential volatility driven around stock markets and other areas, because that's where you're going to see a more immediate reaction to some of these events, such as US election, etc. Are commodities something that's going to see a big driver of trading and a big driver of investment over the near term? I don't know. I don't know if there's better buys out there.
So the commodities basket of all has always sort of ebbed and flowed as a level of interest, and then there's agriculture as a relatively small subset of that. Has always had a level of interest and has always sort of been seen as a bit of a inflationary hedge, particularly when interest rates were lower. People were looking for that return and actually were spreading that risk. It'd be interesting to see now we're coming out of that era of low interest rates and kind of, are we establishing at a slightly higher level? Does that maintain the same level, or are there better returns to be had elsewhere? So many factors, how the US performs, how China performs, how the geopolitics pans out as well. But I think that commodities will continue to ebb and flow as a level of interest. And indeed, probably more directly for agriculture, the value of land as an investment. Land is the ultimate inflation hedge if you look back over the last decades, and that creates all number of variables then coming through the system in terms of access to land and the ability for land to produce food.
Right, well, we've had a tour de force there, Jack, of all of the things that are bigger picture of the macroeconomic world at the moment. I guess my advice from a sort of farmer levy payer perspective is you can't control all of that. We can control very little of it. What we've got to do is react to it, understand the impacts on our business, and then manage what can control. We can't be worrying about all of these things that could potentially happen in the future, but having an appreciation of how they impact the business and setting up businesses so they're able to react to it and able to go through these periods of change is really important. So a bit of business resilience, I think, is probably where we're kind of aiming for with this. It's
been fun nerding out on some of this stuff. I don't think everyone appreciates the nerdiness of some of this stuff sometimes, but I love it. And it's reminded me of when, for about 10 years ago, doing a presentation in Suffolk and trying to explain that actually the wheat price in Suffolk is probably going to take more influence from what's happening in the US Midwest and the impact on corn than it is of what the weather's doing in Suffolk. And I think that's a really strange concept to try and communicate. And I completely understand why, because it's a lot of the drivers are so detached from the physical thing that we're producing and trying to sell. And I think you could drive yourself crazy trying to understand all these things in intricate detail. I think my advice is don't try and do that, but be aware of the factors, be aware that the whole world is interlinked and things that happen over there can impact things over here. But don't worry about getting into the detail of them all, because it's a bit of a challenge.
And obviously, all of these aspects we'll be covering in the market analysis that we do and the market reports that we publish. So if you are subscribed, then thank you very much. You'll be receiving all of this information in multiple different forms. And if you're not, then feel free to go to the AHDB website, find our preference center and subscribe to our market reports. Jack, to finish off with, mystery word, I have no idea. Again, I'm not going to lie. I went quite early with mine. Did you get it?
I was distracted by smorgasbord. And
it was a diversionary tactic.
Yeah. So no.
Toilet roll just before that.
Oh,
it was quite a good way in talking about panic buy and loo roll. Did you panic buy loo roll?
No, because I have a very proactive partner who always insists on having 5 million years worth of supply in stock in normal times anyway, so it was fine.
I don't think I needed any. Not that I was like having bowel issues or anything at the time of COVID. I just never saw the problem.
No, I would maybe instigate VAR on that one though, because toilet roll is an important economic anecdote for consumer perception and behaviour.
Very important in the inflation basket, isn't it? You're right.
Absolutely.
Yeah. So was it a mystery word?
Did you spot mine?
No idea.
Mine was fire exit. I had planned all along where I'd use it, and I completely forgot to use it, so I had to fudge it talking about European gas markets.
Seamless, as ever. Completely seamless. I think Martin, our producers, took it easy on us this week, to be fair.
Too many complaints otherwise.